Good morning, everybody. Let's have a look at some of these charts. So we had a bit of a bounce yesterday across the board for everybody, not just for crypto, for everybody. Mostly because stocks went up, and again, this has always been the thing for me, hasn't it? Recently, that Bitcoin had a reasonable setup, on the short-term 4-hourly timeframes. But stocks didn't, and they still don't. I mean, look at this, rejection on the 7 simple. But to be fair, the 7 simple is normally like the last stage of the downtrend, really. So if we are going to get rejected from here, we'll make a lower low, and that might be enough to turn around from. We might even get some divergence. But it wasn't because stocks decided wanted to do it, all on its own. The inflation came out basically, which was not as bad as forecast. So as far as inflation was concerned, was it 3.1 with a forecast of like 3.3? I know it's minimal. Where are we? Somewhere around here. Core inflation, actual 3.1. Yeah, previous 3.3, forecast 3.2. So we're splitting hairs here, aren't we, really? But it's slightly better than expected. And so everybody's decided to buy, because that was everyone's just so emotional. Oh, inflation, a tiny bit down. We must buy off the back of... Mostly, I think it was an oil scenario. So oil is making these new wick lows, basically, last week and this week. We've seen wicks down here before, only to get bought back up and close above this trend line. Trend line is basically where we are right now, around 67, 68. Now, the reason I look at oil isn't just because, it's a tradable commodity that you can make a bit of money on if you're, I suppose, attention to detail, risk management, and an element of luck, let's face it. Like, everyone thinks they know what's going on with oil, but you don't really. It is pretty volatile. But generally, a guide is the trend here is the guide, and the guide, in my opinion, is likely to continue to move down, especially with all the baby drill stuff. Now, I'm not saying let's go out and trade oil, everyone. I'm not saying that. I'm saying oil feeds into inflation, whether it's positive or negative, right? This is why we've been able to more or less, throughout these last few years, more or less work out whether the CPI is going to be hot or not. There's about a 4 to 6 week delay with whatever's going on with the oil price into inflation prices, just the way that it filters through into all other sectors. But generally it's a downtrend, isn't it, really? This is a downtrend with a breakout and a retest. So we're retesting a 200 exponential moving average on a monthly. So there is a chance that we bounce up, maybe even fully reverse, just based on the technicals. That's all I'm saying. That's all I'm saying. I'm not predicting it because I just don't feel as though that setup, that on the chart, complements the actual, the actual environment that's surrounding oil. But if it were to, then we might see a massive reversal. I just don't see how that's possible. Things are winding down at the moment, aren't they, globally, when it comes to oil prices. We're talking about the wars, we're talking about the potential for increased supply, so we should be looking at lower prices, and just prices sort of like finding their way back down to where they were pre-pandemic levels, between roughly in the 50s, basically in the 50s. Right, let's have a think about the S&P charts. The US 500 here on the monthly, still weak AF, sort of hanging down below moving averages. Obviously the same deal over here on the weekly, mostly below pretty much all moving averages. Obviously you'll see the same thing take place here on the daily, below all moving averages. So what have we got left? 4 hourly managed to reclaim the centre of a Bollinger Band. Right, so in this instance, what we're looking at is for price to stay above 5,577 at this current moment in time. Obviously, it's not trading through the weekend, so that's what we want to see. We want to see a higher low, bounce up, rejection, bounce up, rejection, and then keep moving and basically get ourselves back out of this this little area. There is a good chance that we do bounce and move all the way up to a significantly lower high, just short of around 6,000. But I'm talking about markets that aren't even open at the weekend, so that's boring, isn't it? We closed like this, we closed relatively green, 4 stocks, right? So maybe we're going to start to see what I've just anticipated for stocks in Bitcoin this weekend. So higher lows, higher highs on the short-term timeframes. The next higher low is going to be 82,900. The next higher high should be up here around 89,400. It's kind of that basic, really, at the moment, because I'm not looking at any of these charts and going, these are like epically bullish charts. You know, the higher term timeframes do complement Bitcoin for a full reversal from this area, 77,000. That's what the weekly suggests. Whether we get it is a different story, and we always need to sort of have a rain check on what's going on the broader picture for altcoins and the market as a whole. This is the total market cap excluding Bitcoin, and you can see it's a series of higher highs, higher lows on the higher term time frame, basically showing that the bull market is basically pretty good still. So long as we don't go lower than around 820 billion, really, that would be a bit of a problem. It would be a massive problem. But at the moment, we're sort of moving up from here, and we should be looking for a full reversal, giving us a higher high somewhere around this area. So I'm still very much believing my own hype, which is that the bull market is fine. You know, it's easy for me to say because obviously got a fair amount of Bitcoin, got quite a lot of XRP. It's the bull market still does feel very much alive for me when you reflect on your portfolio. It's not the case for everything I own. I just want to put it to you. I am wrecked on a few things, but mostly I'm not wrecked. You know, I'm mostly not wrecked at all. In fact, mostly living the dream. That might feed into my particular bias because I do look around and obviously I do my Patreon live streams and sentiment is low. Everybody's unhappy. Most charts are terrible. They're completely awful, in fact. But reflecting on my own scenario, it's not that bad at all. It's still very good. So that might be why I'm still saying I don't see this market cycle as being broken. I see it as all part of the game. You know, massively up on Bitcoin, massively up on XRP. You know, other big hodls I've got. Chainlink still up. You know, Solana, not that I've got much up. You know, there's only a few things that I'm actually down on. SHIB being one of them now. Actually down on SHIB, and Atom never really did anything. So it's not all good, but it's way more good than bad. And like I say, I think when people say, why are you still so bullish? And I'm like, well, because the charts I effectively have planted myself in on the higher term timeframes for the biggest hodls are almost all still very bullish. Look at the total market cap, bang, bang, bang. If we're going to reverse, a reversal could easily take place from here, moving on to a higher high between now and September. So it looks like a bull market, smells like a bull market, feels like a bull market, prints money like a bull market. It's probably a bull market still. Market cycle still not over. People always like to try and deviate from the idea that the 4-year cycle is broken. It happened last time. Market cycle's broken. It's finished, it's broken, it's over, the model doesn't fit anymore. I says, but the model still is fitting. Well, yeah, I know, but when it comes to the end of the model, I don't think it's going to. Okay, well, we'll only ever know in hindsight, won't we? We'll only know in hindsight if the crypto market cycle is broken. And, you don't get hindsight until you get to the areas that I've specified for where I believe it's going to be peaking. It's, October, November, September, October, November, August, September, October, November. And that's 4 months, you maniac. Well, yeah. 4 months of 4 years. Still, within a reasonable ratio, I suppose, of time. Right, so I'm going to leave it with you there. I'm still pretty sort of like happy with everything. And to be fair, probably nothing more than opportunities live at these areas. But eyes on stocks, because it does, and I do feel like there is a very good chance that stocks do make another low next week, which means that everybody will also make a new low next week. We don't see any divergences of any real. It's just not strong enough to think that stocks are going to reverse from that last low. I think the next one has a much better chance of that. But we'll see. We'll see. I'm not actively trading these areas at the moment, sort of kind of like just sitting back on the sidelines, and just enjoying seeing whatever happens happen. I don't feel compelled to trade it. You don't always need to trade. Sometimes you have to accept that. Actually, there's bigger things going on behind the charts, which make the charts less reliable to trade. So that's basically my stance on the situation. But yeah, I'm not really sort of keen to jump in too hard at the moment until I start to see some better picture painted in front of my face that allows me to, participate once again actively on the shorter term timeframes. Right, that is it. I'll leave it with you there. Nothing else to say. Hopefully that was a brief but reasonable overview for everybody. And yeah, thanks for watching. I hope you have a nice weekend. Take it easy.